There are a lot of benefits in fixed income. If you think of it, stability, the cash flows, the liquidity, the diversity that it offers all the investors, we think are great benefits for every investment class. We think everyone should have some fixed income as part of their portfolio. Capital stability is the movement of your capital. It's the safety. It's the movement of how safe is your money. Do I get my money back? Do I get a return on my money, or do I get my money back? The way to present capital stability is in a capital structure. The more senior you are in the capital structure, think of senior bonds, subordinated. The viewers will know ASX, or they'll know equity. They're the riskiest part of the capital structure. So the further you're up the capital structure, the safer your investments will be. Senior bonds get paid out first. In the event a company's wound up, they'll pay out the senior bondholders first, then the subordinated, and further down the structure to the equity. Cash flow is the returns you get from your fixed income assets. If you have a fixed rate bond, you'll have a predetermined rate of cash flows that you'll get on a consistent basis. The other bond that you can have is a floating rate note, and that floating rate note moves with the bank bill swap rate. The bank bill swap rate is the rate at which banks lend to each other, lend and borrow to each other. The viewers will be familiar with the overnight cash rate. It moves up and down, and as that moves up and down, your returns will move up and down with a floating rate note. The Australian bond market is one of the more active markets in the world. It's an over-the-counter market, which means the counterparties ring each other and trade through via the phone. It is one of the more active markets in the world. The corporate bond market, as part of that market, is equally active. It trades a lot more bonds in the over-the-counter market than at the moment trades in the Australian Stock Exchange, the ASX. Diversity is a key theme for all investors. The Australian bond market is very diverse. You can buy into the Australian property market via RMBS, you can buy into infrastructure bonds, you can hedge against inflation through inflation-linked bonds, you can buy industrials, you can buy financials, you can buy fixed rate returns, and you can buy floating rate returns. Diversity is the key to all the investors, and I think in the bond market you can get that diversity through the array of securities available.